Owning assets overseas can sound really fun and exotic. But did you know the Australian government, ATO, can tax you on these assets that are completely out of the country? In this episode, we're going to talk about the most commonly held assets overseas, how the government's taxing them, and finally, the options you have to minimise that tax. I'm Jeremy Iannuzzelli, and welcome to What School Should Have Taught You, a podcast where I share with you all the lessons you need to know about building true wealth.
Everything school should have taught you in one place. With a property portfolio of over 17 million and an accountancy firm of over 16,000 clients, as well as being an accountant to some of the wealthiest people in Australia, Jeremy Iannuzzelli will be sharing his lessons on everything school should have taught you so you can build the life you want.
Now, as we all know, at the moment, the world's becoming very much a big brother. It's crazy and intuitive what the ATO is doing and learning and adding into their system every day. As an accountant, I've got to see how the tax office has evolved over the last 15 years. It's amazing to see the level of information that they have. As an accountant, we get to see when properties were sold, what properties people have, bank account interest that they're earning, across a plethora of other things. The ATO is doing a lot of integration with a lot of the private sector to capture a lot of data, and also working with government agencies around the world, and AUSTRAC getting involved with a lot of government agencies around the world to understand and absorb the information, especially around the assets that people own around the world. Now, the most commonly assets that I see people having at the moment are properties. People are moving to this country. We have a very strong migrant population. We do have roughly about 1 million people coming in each year over the last 3 years post-COVID. And what's that done? It's brought a lot of wealth into the country. But a lot of these people didn't just sell everything up overseas and come to this country. A lot of people might be still holding their own home. They might be holding cash or other assets, or potentially other interests in business. The government here in Australia do legislate that all the income that we earn worldwide, if you're an Australian tax resident, and there's some rules about being an Australian tax resident, meaning that you've resided here for 183 days, you're domiciled here, meaning this is where your home is, your bank accounts, essentially your life's been set up here in Australia. If you are classified as an Australian tax resident, your worldwide income that you generate from all your investments overseas need to be taxed here in Australia. How often do I see so many clients, new clients that come to me that have had assets or properties overseas for a number of years and were not told that it needed to be declared or disclosed in their Australian tax return? If the ATO is watching, I can guarantee you we've cleared all that stuff up. But in saying that, once they start to learn and understand that these assets do need to be included, we can start to obtain some other benefits from it. Some of those benefits could include negative gearing. If they're holding assets overseas that are costing them more money to keep than the rental income in, well, the Australian Taxation Office does give them a benefit, very similar to that of the benefit you receive from negative geared properties here in Australia that you own. So these are important things to consider. The ATO is just not looking to tax you on the income, they're looking to tax you on the net effect, whether it's positive or negative. So that's one important thing to note. There are a lot of concessions involved as well about where you're paying the tax. So for most people, if you've migrated here to Australia and you do have a taxing implication in your home country, for argument's sake, where that overseas property is being held, you can choose to get a valuation being done, essentially locking in almost like a cost base. And therefore, if you sell it for more than that while being an Australian tax resident, the ATO is only going to tax you on that increase from the time that you became an Australian tax resident. So I advise you to make sure you're really looking at all your assets and getting the right advice from the right people, so you're not just paying tax for the sake of it, but you're paying the right tax in the right country according to the right legislation. So that's so important to understand. Number two, if you're leaving the country for argument's sake and you want to still retain your Australian-based assets, you do need to do a tax return again if you're holding Australian real property, like you would normally do in your Australian tax return. Any losses that you accumulate during that period of time are carried forward if you're an overseas tax resident. And if you do decide to return back to Australia and start your tax residency up again, those accumulated losses continue to get carried forward and then can be utilised as immediate tax deduction upon your return to the country. So it's important to note that if you come back to the country on that 1st of July period, earn a really strong income and pay a lot of tax, you might be getting potentially 2 or 3 years, or depending on how long you stayed out of the country, as a tax deduction based on the accumulated losses during that period of time. So it could be a significant level of tax benefit you get. Planning is essential. Because if you do come back to Australia at the very end of the financial year and maybe earn 20 grand, well, we all know there's no tax roughly on $20,000 worth of income. But unfortunately, that 20 grand worth of income goes against all those accumulated losses. Essentially, we're giving away a lot of free tax benefits that we would have had in the future. So it's important to make sure that you're documenting the process when you're coming into the country, when you're leaving the country. What are the cost base applicable to that asset at that particular time? What's the income that needs to be included? Big one is around interest. Again, another common thing that people have around the world or when leaving Australia. If you are a non-tax resident for Australian tax purposes, interest is taxed at 10%. And if you are earning income from other places around the world, you might have a bank account, say for instance in the subcontinent, any interest that you accumulate on that, you do need to declare that here in Australia. Now, for anyone out there thinking they'll never know about my property in Bolivia or they'll never know about my property in the outskirts of India, AUSTRAC is a very sophisticated system. It's a very sophisticated government department. They are employed to track all the money movements around the world. Now, they are speaking with a lot of different tax departments in a lot of different countries. There's a lot of sharing of information that's going on, and we've all seen that through the Pandora Papers that came into the news around about 2 years ago, leaking all these specific facts about all these tax dodges around the world. AUSTRAC has been set up for these particular things. They're there to catch money going in and out of the country that could be from different sources that haven't been declared in your tax return. There's another concept called the Betterment test, and this is what the ATO are using to catch out tax dodges as well. So if you've got people bringing money into the country, say from the sale of a property, it's only a matter of time till AUSTRAC or the ATO, and also utilising the Betterment testing, works out how did you get this particular amount of wealth when on your tax returns you've been declaring a very different position. So as the software, as the systems, as the processes are becoming more sophisticated, the government's investing a significant amount of money in making sure that people are paying the right share of taxes, especially when you're Australian tax resident. So be mindful of that. Always ensure you understand your financial situation. Always ensure you understand where your assets are located and the position of those assets, and make sure that you are declaring the income in the right legislation, the right country, and also in the right tax return. There are some foreign tax offsets that you can receive as well, and this is the government giving some reprieve in the sense that if there's a double taxation treaty, essentially saying that if you've paid tax in that country, we'll let you declare that as an offset here, and that means you'll only pay a slight amount of top-up tax depending on your circumstances, or potentially pay no tax at all. So make sure you are speaking with your accountant. Double taxation treaty agreements between different countries, foreign tax offsets. These are all the little things that can help with your tax position here in Australia when you are lodging your return. So lastly, just want to really touch base about minimising your tax. Don't forget, look at all your various different concessions available to you, such as valuations when you're leaving or coming back into the country. That's always a big way to help minimise the tax. Making sure that you're declaring all the right foreign tax offsets, important way to minimise your tax also. And number 3, lastly, ensure that you're capturing all of your data. You don't want to get into a position where you get caught 1, 2 or 3 years down the track. Have a substantial tax obligation that gets picked up by AUSTRAC or the ATO, because they're not going to be kind to you in most circumstances. They will charge you interest and they will charge you penalties. I'm Jeremy Iannuzzelli, and that's what school should have taught you today about overseas assets. If you're enjoying the channel, make sure you hit that subscribe button, leave your comments below in the show link, and if you've got a question about overseas assets that I haven't discussed in the show, leave your comments in the section below and I'll do my best to get back to your question.